Hi everyone, my name is Julie Falen with United Equity Capital. I want to thank each of you for coming and hearing a brief introduction to one of the greatest opportunities I've personally seen in many, many years. Let me begin by saying we are in one of the greatest transfers of wealth in our lifetime, and we are in one of the greatest opportunities to increase our own wealth that we will ever see. The question for many of us to ask is, are we in a unique position to take advantage of this opportunity that will likely last only 2 to 3 years? In 3 years from now, many of you will be saying one of two things. I'm glad I took the opportunity, or I wish I had. Today's presentation is on generating massive passive income with private lending. I hope you get a huge amount of value from my short discussion. Let me ask you a question. What is the hardest thing to get access to right now in this credit-frozen market? That's right, cash and credit. Well, let me ask you another question. With cash and credit, what can you find on sale? In fire sales, at discounted prices, and for pennies on the dollar, pretty much everywhere in America. Not just real estate, distressed real estate. So today we'll discuss how to earn high yields secured by safer real estate while you stay in control of your money and receive nice monthly payments. Who doesn't like regular monthly payments? Let me share what private lending is not. It's not about stocks. It's not about bonds. It's not about investing on Wall Street where someone else makes the money, and it's certainly not certificates of deposit that are paying somewhere between 0 and 2% measly interest. Private lending, also known as trust deed investing or private mortgage lending or private money lending, refers to a private individual like you or me making a safer loan to another individual like you or me using real estate secured as collateral. And in this scenario, you are the bank. You make the rules. Your name is on the note and the deed of trust. In the game of Monopoly, who always wins? Is it the person who owns all the houses or the apartments? No, it's always the bank, because the bank makes the rules. They win almost 100% of the time. Private lending is being the bank, making the rules and making the money, and moving the risk to others. In 1871, Baron Rothschild, the famous banking baron who founded a dynasty, said, "Buy real estate when there's blood in the streets. Buy low and sell high." Remember, who always makes the rules? That's right, the banks always make the rules. So you may ask, why haven't I heard of this? Well, Wall Street and the financial institutions don't make money from private lending. Remember the old saying, the rich get richer and the poor get poorer? But I'll tell you a secret. The Wall Street financiers do private lending themselves. That's how they become part of the 1%. Let me share just a few of the many benefits of private lending. First, your investment is secured by tangible, real property with value. Second, safety. Your investment is secured by real estate. As long as there is value in the property, the risk is less. Great returns, in fact, amazing returns. People are familiar with real estate investing because real estate ownership is so common. Private lending is not. And best of all, predictable monthly payments. Who always gets paid first? Yes, that's right. The bank is always paid first. And you are the bank in this case. And if the borrower doesn't pay, you get the property. And these are properties we'd always be happy with. Let me walk you through a very common cookie-cutter opportunity. Let's assume we have a $500,000 house in one of the most desirable neighborhoods in the Los Angeles area. Let's assume that the borrower needs $300,000 in the form of a loan. That gives us a 40% cushion known as equity. $200,000 worth of protective equity, or 40%. See, we lend no more than 65% combined loan to value, and we lend it out at somewhere between 12 and 15% interest. Now, you may ask, why would someone pay 12 to 15% or more in interest? Are they crazy? Well, imagine this scenario. You're a hardworking real estate investor. You get a chance to purchase a property worth $400,000 in today's market for only $200,000. That's buying property for half price. Remember, buy real estate when there's blood in the street. To get this deal, you have to close it in 5 days. The bank will only take cash that you may not have liquid right now. You really care if you pay 12% plus or more for 6 months? If you can close quickly ahead of your competition on the deal? Welcome to Real Estate 2012. Let me summarize exactly why borrowers will pay 12, 15% or more. Immediacy. They need access to money much faster than conventional lenders can or will get it to them. Asset-based underwriting. Borrower qualifications typically are not as important as the value of the property. The value of the property is what determines the loan more than the borrower's credit score or financials, although we do look at those too. Timeliness. Conventional lenders don't like short-term financing. On the other side of that same coin, they also take 30 to 60 days to finance and fund a deal, when our borrower may only need 5 days or only have 5 days. Improvement costs. Rehab loans can include the cost to improve the property, thereby substantially improving equity. And traditional lenders limit the number of total loans an investor may have. We've gone from 4 to 10, and who knows what Fannie and Freddie will do in the future. So, you're probably asking, how does this cash printing process work? Simple. It's just 5 steps. And remember, you're the bank. First, the borrower requests a loan from us, and then submits all the documents and information we need. Then our broker, who's a professional licensed partner of ours, confirms the viability of the property and of the borrower. The investor, possibly you, is introduced to the opportunity and then makes a commitment. Many times it's first come, first served, as the opportunities come and go pretty quickly. Then an escrow is opened with a bonded and reputable escrow company, and all the paperwork and investor funds are submitted. Lastly, our broker services the loan, and the investor, maybe you, simply sits back and receives their monthly passive income check. Pretty simple. We do all the work, and you get your money. So what does it cost you, the investor? Unlike most financial institutions like Morgan Stanley, Goldman Sachs, etc., there are never, ever any investor fees. Well, you're probably thinking, this is incredible, but how do you, Julie, and United Equity Capital make your money? Well, pretty simple. We collect a spread between what we collect from the borrower and what we pay you, the investor. We do all the work and give most of the profits to you, and we do this over and over again because we love to do it. We have found a win-win-win situation. Our investors love these deals, and they continue to invest with us over and over again, and because they're happy, they also refer their friends and colleagues to us, and that makes us happy. Here's a typical investment. We invest at 60% loan-to-value on a nice real estate property for 6 to 36 months, typically on the shorter side. We usually fund first deeds of trust, and we normally pay 7 to 10% plus that's interest to you, the investor, sometimes even more. There's usually a 1% servicing fee, too. We usually stick to non-owner-occupied 1 to 4 unit residential properties, as I mentioned before, because of the safety factors. We like to fund properties within a 150-mile radius of our office so that we can see them, and the money is usually used for rehabs and flips, or for refinance and hold in the case of rentals. We found that deals give us the massive profits right now in these times and in this incredible market. Many of our investors in the past have asked, how am I protected? Good question. So let's talk about the individuals and companies doing their job along the way that protect everybody. First, we use a large title company to insure the loan. Then we use a professional escrow company to manage all the paperwork and manage the entire process. We get licensed appraisals to verify conservative value. We always use a licensed broker to make sure the documentation is complete and that laws are followed and upheld. And lastly, we use a professional foreclosure company in the unfortunate event of a foreclosure. Unfortunate for the borrower, that is. It's simple. It works. It provides win-win-win situations for everybody involved. Everything is transparent and handled by licensed professionals. And that's why we think this is just like printing money. Of course, every investment has risk, and I'd like to address this so you understand. Almost all loans will have at least one late payment. You actually get paid more for that because of the loan penalties that the borrower pays. A portion of these loans will turn in default, and some will even go into foreclosure. Well, we're prepared for all that, and most of the time we actually make more money in these cases too. But very few make it all the way to foreclosure auction. Why? Simple. There's just too much equity to lose by the borrower. Remember, we're funding up to 65%. They are putting in 30, 35, or 40. The most important thing to look at in these deals is the value of the property. That's why you want us involved, because how creative we can be in structuring these deals. Some people ask us about the key differences between private lending and, say, investing in stocks. Well, let me share a few of the differences. Private lending is an incredible and quick cash flow generator. Stocks are not necessarily good for cash flow. With private lending, you get to benefit from OPE, other people's experience. Stocks are based on demand and beyond your control. It's really predictability in private lending versus gambling in the stock market. With private lending, you get to benefit from OPT, other people's time. Stocks, again, are totally based on demand. It could be 1 month or it could be 10 years before a stock actually goes on, and you have no control of the time frame there. Private lending is all about passive, predictable income, is secured by real estate, and provides high returns. The S&P historically provides much lower returns, and everybody has seen the volatility of the market and the effect on investors' income, not to mention in the last few years where we have seen people lose 30, 40, 50, 60, even 70% of the value of their investment all at once. One of the greatest benefits is the security. Private lending is backed by safer real estate with a huge cushion. Stocks really have no collateral and, again, are based on demand. Stocks can fall 10 to 20 to 50% in a single day, week, or month. A decrease in real estate usually takes years. Let me end by saying that private lending is still one of the relatively safest investments you can make that also offers you a very high return, is backed by safer and secure, more secure real estate with a cushion, and most importantly, provides you with a fixed, consistent monthly cash flow that starts immediately. We are finding incredible opportunities in this market, and I would like to finish by asking each of you if you might know someone who would like to take advantage of one of the great opportunities in our lifetime, taking very low risk, generating very high returns, and without doing any work. This is one of those rare opportunities to participate in one of the greatest transfers of wealth in our lifetime and one of the greatest opportunities to increase your wealth. If you know someone, I'd love to spend more time discussing this rare and unique opportunity. Have them contact me. I can be reached at Julie Falen, 800-210-9913, toll free. Again, that's 1-800-210-9913, or send me an email at julie@re4smartinvestors.com. That's julie@re4smartinvestors.com. Julie@re4smartinvestors.com. Thanks for your time, and here's to your prosperity.